Hi guys, I'm Dan, this is Kai. We are the directors at Crescent Mortgages. Today we're bringing you a first-time buyer's complete guide to mortgages. So this is the place to start if you don't know what you're doing. We're going to talk you through the entire process from start to finish, right before you even start looking for a property, right through to when you actually get the keys. And make sure you stay tuned until the end because we're going to be giving you a really important tip which everyone needs to be aware of, so stay tuned. So as always, we're not YouTubers, we are mortgage brokers. Although we're here trying to give people free, accessible online content, we can assist you with your mortgage. So if you need to understand how the process works, you need an initial consultation, you want someone just to kind of talk you through the process and get started, we're here to help you. So feel free to give us a call, send us an email, head over to the website, leave something in the comments and we will come back to you. Today's video, essentially, will kind of be broken into two, and both are equally as important. First part of the video is going to talk you through everything you need to do in preparation for finding a property.
Yep.
So this may come as a surprise to some people. You can't just one day wake up and say, I'm going to go and buy a house today. There are lots of things that you do need to plan in advance. Some people do.
Yeah, some do and some get away with that. Most don't get away with that.
Yeah,
it normally goes
it
wrong.
can end in tears. So as I'm sure most people will know, you need to plan a few things in advance to get you ready to apply for a mortgage. Once you found a property, you then have to run through the full mortgage and legal process to actually become the legal owner. So that's the second part of the process, isn't it? So it's kind of split into two. So naturally we'll start at the beginning.
Yep.
So we're going to run through kind of the key, probably 5 points of everything you need to do to prepare for finding a property, and then we'll come to the mortgage process afterwards. Kai, what is the very first thing that people need to do?
What should you do?
Pretty much before you do anything else.
After you've watched this video,
yeah,
and any other applicable videos that you think might help, you should get in touch with a broker. As biased as that sounds to brokers telling you to get in touch with a broker.
Sounds biased,
it sounds extremely biased.
Sounds really biased, but it's true.
It's a big thing to do to buy a house for a lot of people. It happens a lot and it's a very common thing that's done, but there's so much going on that even if you just speak to someone to get an understanding, that will help you, no matter if you choose to use them or not.
I mean, just to be clear, you can speak to a bank directly. For the sake of this conversation, we'll assume you're going to speak to a broker because a broker can explore the entire market. They will give you advice. Not every bank or building society will give you advice. It's kind of execution only. They'll just give you a list of things you can do. The broker will give you advice. So speak to a broker. Now they're going to go through a consultation, aren't they?
Yep.
So it might take half an hour, give or take. Local broker face-to-face or over the phone. Basically everything we do is over the phone generally, isn't it? So we can deal with people across the whole country. They're going to take some of your basic information and start to work out if you can get a mortgage. If you can, how much can you borrow? What size deposit you're going to need, which is a point we'll come to in a second. Give you a rough idea of what kind of mortgage payments you're going to be expecting. So you know roughly what to expect as far as budgeting, which we're also going to come to. And just generally answer any questions you have. So during that consultation, as long as you deal with a decent broker, you should be able to ask them any questions about mortgages, interest rates, the process, anything you're not sure of, and they should be able to cover everything. Once you've had that conversation, you should be in a much stronger position and you should feel much more confident to start your property search.
Yeah, it should start to set some parameters, shouldn't it?
Yeah, and then they'll also provide you with a certificate, won't they?
Yeah, generally you'll get an agreement in principle, mortgage in principle, decision in principle. It's all called different things, but it's the same thing. It's a confirmation that you can do whatever it is they've told you can do.
You can get a mortgage. You should be able to get a mortgage. The estate agent, when you start to look at properties, will normally need to see that certificate. So make sure you do, before you do pretty much anything else, you get that certificate, which, like I say, you can get from your broker or from your bank. Once they've done that, what other things do they need to think about before they start looking for a property?
Well, I guess some of these points will be brought up within that consultation, to be fair. And the next one, the probably question would have been asked is to understanding your current situation with your credit or credit file. Your broker's probably asked you that in that consultation if you think your credit's okay. You may or may not know. You may know never missed a payment, all fine, etc. Great. You may be unsure.
What is credit?
You may want to check. What is credit? That's a good question, to be fair.
Maybe we don't need to delve too much into the detail. If you don't know, just say.
But loans, credit cards, finance agreements,
sometimes utilities,
mortgages, utilities, even your current accounts will be on there. But it's a footprint that the bank uses to go, do they pay things back? Don't they pay things back?
Yeah. What's your credit history? What's your credit score? Can you maintain bills when and outgoings once you take out an agreement? And it essentially builds a score for you, doesn't it?
Yeah.
We won't get into. We've got quite a lot to go through, so we won't get into the finer details. But It's not mandatory, but if you have any concerns about your credit, so if you think, oh, actually, do you know what? There was a dispute I had a couple of years ago, or there was, identity fraud. They took out a card in my name. I never really knew what happened. If you, missed a mobile phone bill, or anything more severe, let's say you had a default or a CCJ or bankruptcy or anything like that, then generally we as a broker would want to see your credit report before we do anything else. So if there's any concerns about your credit, or maybe you've never had any credit, so you haven't built up much of a score, or you've not been in the UK that long, again, you may not have built up much of a score, we will normally say, let's have a look at your credit report, because that's the first thing a lender will do is run a credit check. You have to meet the credit check.
So what can they do?
You'd obtain your credit report from one of the big agencies. We are affiliated with Check My File. They pull through the credit information from the 3 biggest credit agencies, because lenders often don't obtain your credit through just one agency. There's multiple that they can access, and they all use different ones. So we use Check My File because it pulls 3 through. 3 through. There should be a link in the description. So if you want to follow the link, you can obtain your credit file and send that to us or whichever broker you deal with. It's not mandatory. You don't. If you think your credit's fine, you've got a good score, you've never had any credit problems. We don't need to see your credit report. But if there's any question marks, you have to get to the bottom of that before you start the mortgage process, because you could be stopped in your track on the first hurdle if you fail the credit check. What's the next thing?
I'd go work out the budget, isn't it?
Work out your budget.
Yeah. But both your budget for what you can afford property-wise in terms of property value, and also your monthly payments. I guess both those things.
So the lender will do their own affordability assessment to work out how much they're going to lend to you, and that will dictate from a mortgage perspective what your limit is. But you as the client also need to be comfortable with what your limit is. So just because a lender will lend you 250,000, for example, doesn't mean you should borrow 250,000 if you look at your finances and you think that the mortgage payment is going to be too high. So you want to have a little look through, just work out, obviously, you won't know to the penny, it's impossible to know to the penny, but work out what your utilities are going to be, work out roughly what the council tax is going to be on the property. Obviously look at, your food costs, if you're buying a flat, what the ground rent and service charge are. Run through a breakdown, look at your disposable income of you or you and your partner or whoever you're buying with, or if it's just on your own. And work out roughly what you can afford. And like I say, the conversation you'll have with your broker will confirm roughly what your mortgage payment will be, so that you can start to get an idea of what to expect. But always make sure you budget before you start looking for a property. You don't want to kind of get your hopes up and then realise actually interest rates are higher than you thought, mortgage payment is higher than you thought, and it's just not going to be achievable. And then I guess this is probably one of the most important parts, the next one, which is save your deposit. You will need a deposit when you buy a property. There's the odd scheme. You see in the headline, in the news sometimes, a lender's released this product where you don't need a deposit, or it can be a small deposit. Yes, they're out there and they do suit some people, but for the sake of this video, most of you are going to need a deposit. Minimum.
Generally 5%, isn't it?
But not every lender accepts that.
Minimum.
And with a 5% deposit, interest rates are higher, credit checks are stricter,
less lenders
to choose from. They won't
higher rates.
I covered that, but it's important ones, so get it in there again.
Higher rates.
Okay. It's not that important. The bigger the deposit you put down, and it's done in 5% increments generally, so every additional 5% you put down, things will get better. Interest rates will get better, you might have more lenders to choose from, they might be willing to lend you more, credit checks can be a bit more lenient, they're more likely to accept you, so things get stronger the more you put down. You can have that conversation with your broker, but minimum of a 5% deposit, but ideally the more you have the better. You're going to need to be able to evidence and show that you've got that most of that when you apply for the mortgage. So you need to kind of get, if you approach a broker and you say, I want to start looking for a property, I've not got any deposit, I've got access to no money yet, they're probably going to say to you, you need to save and get a bit of money behind. It's a bit early for you to start looking for properties.
I guess just on deposit, whilst save your deposit, you can have deposit. If mum, dad, or immediate family can give you money for a deposit, that's behind your own savings. The most common is mum and dad giving people money to buy a property. That's okay. You don't necessarily need to move all the money into the bank, and so just know where it's going to come from. And if somebody asks for evidence, you could evidence it. At this early stage, don't worry about moving everything around. Just
That can actually cause more problems sometimes when you try and move all the deposit into one place. They need to often track the original source of it. So when we have the initial consultation with you, we're not going to ask to see all your bank statements. We don't need to see at that point where all the money's coming from. We just need to know that you have access to it when it's going to be needed. Like I said, it doesn't have to be savings. It can be generally gift from a family member is the most common one. We don't all have the luxury of that though, but that is quite a common one. They're kind of the four main points. So the fifth one, once all of that is kind of tied up, it's the exciting bit. Start looking for a property. So once you've got all of you know what your budget is, you know roughly what you can afford, you've got your deposit saved, you've had the conversation with the broker, everything looks good. Start looking for properties. You've got the agreement and principal certificate from your broker. View as many as you want. Maybe go on Rightmove, filter in the area that you're looking at, the type and size of property, number of bedrooms, the price range you're looking at. Go and look at as many as you can. You're not going to know until you view them what your favourite is. Depends on the market. There might be loads of properties that meet your criteria. If there are, try and smash out a bunch of viewings over the weekend. It might be that in the current market and area there aren't a huge amount of properties, in which case you might only have one or two within your criteria. But look at as many as you can. Once you've found a property and you like it and you're happy with the price, you can make an offer on the property. It can just be verbal. Say to the estate agent, we'd like to offer X amount. If they accept your offer, that really is when the fun begins. And that then takes us to the end of part one and moves us into phase two, which is the mortgage process once you found a property. You're going, what do you mean? Have I missed something?
Well, you said the most exciting part is the financing of the property. I'm pretty sure we're sarcastic. Well, more fun for us maybe because we get to do some work. I don't know. And I was going to add in, sorry, there could be a big gap between that consultation, you're doing those first 4 or 5 steps.
I'm having some technical issues. Oh, you carry on.
There may be, it might be months to find one, and you may or may not talk to your broker loads at the time. You may talk to them not at all, whatever.
Just quickly, that's a good point actually. When you have the initial conversation with the broker, the first thing you do, for some people, you might be ready to go, start looking for a property, and you found one and had an offer accepted within a few days. Sometimes we don't hear back from people for 6 months.
And that's fine.
And that's okay. There's no rush from our end. You need to take your time, make sure you're ready, make sure you found the property that you're happy with. But that point, there's no exact time frame, is there?
No.
But once you have made an offer on a property,
you make the offer, it gets accepted, which is, I was going to say, it's weird. There's no ticker tape or fanfare. It's been accepted. Let's get. People often don't know what to do, do they? You kind of, which is kind of part of the point.
They email us, don't they? Dan, offer accepted.
Help.
What next?
Yeah, that's it. So, and I guess this
but we're going to tell you
this is
next.
point 2. Yeah, this is point 2.
Phase 2.
Phase 2.
Okay, we've been through this.
Section 2 is a phase. After you've whoever you got your agreement principal from, you probably get in touch with them first and foremost, I guess. But assuming you've got in touch with your broker, your bank, whoever it is, you're going to start preparing documents.
And your broker again will normally tell you at the time what they're going to need.
What do you need, what format, etc. But preparing documents. So what general documents?
Can I just take a step back really quickly? The point, and maybe we've touched on it, it's fairly self-explanatory, but the first point actually, which we haven't covered at all, which is exactly the same as the first point of phase 1, contact your broker. Did we say that?
Yeah, just what you said,
Did you?
Yeah.
You must have said it really quietly because I didn't hear. So contact your broker.
Yeah, it is. It's get in touch with whoever you've got the agreement principal with generally. Assuming that you were happy with that person.
You sure you said it?
Yeah.
Well, if you did, they got it twice.
I skirted around it. Either way, get in touch with someone. Probably the person.
Tell your broker we're ready to go ahead. They will then talk you through the next stage. But one thing they're going to ask for is
they're going to start asking documents. They might ask straight away. They might ask very shortly after. But they're going to ask for documents pretty soon at that point. So there's a few, aren't there?
Generic ones, and then a few slightly different ones depending on your circumstances. So the generic ones are
proof of income. So if you're employed,
probably 3 months pay.
3 months pay slips, probably. If you're self-employed, a little bit more complicated. You might need to get more history, but tax calculations, tax overviews.
Often for the last 2 years.
Or possibly company accounts, depending on your business. We've got other videos on self-employed and what you need.
And we'll talk you through
if you need that.
Proof of income.
A proof of income.
Bank statements, normally from the account that your salary is paid into, just so you can see all the transactions match. Normally 3 months bank statements, they're the fairly standard ones. And then proof of deposit. So again, depending on where your depoit's coming from, if it's just savings, we'll need probably savings account statements. If it's a gift, we'll need kind of a gift letter signed by the person gifting. They're the generic ones. And then potentially, but not always, ID and address verification. Passport, council tax, utility bills that have been posted to you, but we will normally run an electronic ID check. So they may not be needed, but always sensible to make sure that you have those ready in case they are needed, because the bank, the broker, or your solicitor may ask to see those at some point.
Definitely.
A lot of these aren't necessarily in an exact order. Within a couple of days, a lot will be happening. This is when you're getting everything ready to go. The next one is pick a solicitor. They've got a really, really important role in the process. Who keeps turning that light off?
I don't know.
They've got a really, really important role in the process, the solicitor, arguably as important as the mortgage broker. So the two main things that you'll need to do to buy the property and get the keys, which will kind of move forward simultaneously, are your mortgage application, where they assess your details and agree to give you the mortgage, and your legal work. So the solicitor will be doing lots of work in the background, which actually, we'll come to this in a second, but actually takes normally longer than the mortgage application. The solicitor has a lot of work to do. So you'll need to pick a solicitor. We as a broker will have lots of solicitors that we can choose from to recommend someone to you. So we can recommend a solicitor to you, but you can use kind of whoever you want as long as they're on the lender's legal panel. So make sure you check that. Each lender will have specific solicitors that they can or cannot work with. So you need to make sure whichever bank you're applying for the mortgage, that the solicitor that you're opting for or opting to go with can work with that lender. So make sure you check that before you pay them anything. The other next part before you apply for the mortgage, which we've actually just filmed a video on, it went on a bit as well, didn't it?
Lengthy video actually,
is this is really important. We've got another video which is coming out or has already been released, picking your mortgage scheme. So you need to pick what type of mortgage you go for. So fixed versus variable, short term, long term. There are lots of pros and cons to each. It depends on the market, depends on your plans, depends on your attitude to risk. Your broker will talk you through that, but you have to pick the scheme before you apply for the mortgage.
Yeah, you need to know what you're applying for. Exactly that. You'll have a conversation to go through basically what Dan just said there, and you will go, right, we now know our preference is this or that, and your broker will give you the best version of this or that, generally.
Once you find out though, once you know which solicitor you're going with, you've got back to your broker, you've picked the mortgage scheme that you want to go for, you've provided all your documents, then you apply for the mortgage.
Off we go.
You start the process. The process gets underway, and you'll try and tell, once you've had your offer accepted, you'll try and tell those last 3 or 4 points within a day or two, so you can get the process kind of rolling. So apply for the mortgage, and also instruct the solicitor to start their legal work as well. So as we say, the mortgage and the legal work will be running
concurrently,
or simultaneously, or in tandem.
Together.
The mortgage application should hopefully be agreed within a few weeks, but it can vary. It's the legal work that takes a lot longer. So we say on average it might take 4 months to buy a property from start to finish. The mortgage doesn't normally take 4 months, it's normally the legal work and all the work they're doing in the background that takes the longest. So they do have a really important role. To get the mortgage agreed, 3 main hurdles, which again we've covered in other videos, but to get your mortgage agreed, I love a hurdle because it's nice to just break it down, it's so clear. So to get your mortgage agreed, 3 hurdles. Pretty much every mortgage application will undergo the same process. Number 1, they run the credit check, as we touched on earlier. The first thing they do is run a credit check on you. You have to pass the credit check. It's all done by a computer, by an algorithm. It's not looked at by a human. If you pass the credit check, we then move on to the next stage of the process. If you don't, that lender's declined you. And then we will, if we haven't already seen your credit file, we'll have a look to work out if we have any backup options, but it's not a good start if you fail the credit check.
It's not ideal. No.
If you pass, we then move on to the final 2 phases of the 3. They'll do a mortgage valuation. They'll have a look at the property you're buying just to make sure the basic condition and make sure you're paying a fair price. And they'll also underwrite your application. So they'll look at your documents, they'll look at your information, they'll make sure it all adds up, they'll make sure you meet their criteria, and a human will look at it to make sure they're happy with you and the property and that they're willing to agree to give you the mortgage. Once they've agreed the credit, the valuation and the underwriting, you then get your mortgage offer. Cue confetti. Which is them saying, we are going to give you a mortgage on this property, it's fully agreed. Generally from that point, 99% of the time that offer it's not binding, but once you've got the offer, it rarely would be withdrawn unless something really drastic has changed. That normally means the mortgage is agreed, mortgage work is done, and then you just have to wait for the legal work to be complete, however long that takes.
That's also the point generally where the solicitor really takes over, isn't it? Generally, the broker can still be involved.
We'll still be here if you need anything.
Still help you with those little questions you might be having on the process, but the mortgage is there or thereabouts done at that point.
Yeah.
You know, and the solicitor has got an offer that they can effectively go, at some point, we want the money from that offer to buy the property.
And then once that happens, then the final stages, so there's a few other bits and pieces after you've got the mortgage offer that you can organise. So if you want to do a private survey, so this is a bit different to the mortgage valuation. This is a survey that you would organise to send a surveyor out to look at the property to make sure they're happy with the condition. There's no major structural issues that you need to be aware of, because if there are, when you buy the property, it becomes your problem. So it's not mandatory, but some people choose to pay for an additional survey.
We've got a video on that one.
We'll have another video for that as well.
That one's already out.
You can do that before the mortgage is agreed. We tend to advise you not to do it until the mortgage you've got the offer, because you will have to pay for it. So at least wait until your mortgage is agreed before you start forking out for additional checks. And then the legal work will continue over the weeks. You may not hear anything. They'll be doing all their work in the background. And then right at the end of the process, you will exchange contracts where you sign the contract and exchange it with the seller to legally confirm that you're going to buy the property. So at that point, you can't really pull out without potentially getting sued. You have committed. And then depending on the type of purchase, normally completion, when you actually get the keys and become the legal owner, is often about a week after exchange. It varies. If you buy a new build property, exchange can be a lot earlier, but often exchange happens and then a few days, a few weeks after, completion happens. When completion happens, you are the legal owner of the property, you can move in, and the following month, normally your mortgage payments will start.
Yeah.
Thorough. Is that thorough? We could have been more thorough.
We would have been there all day.
Yeah, we
otherwise.
would. Now, we've got other videos and we're making other videos talking about the real basics, you know, what is a mortgage, the jargon, what everything means, which again, we
drilling
probably
down to certain points.
Yeah, but this is just kind of a full process of before you find the property and once you found the property, and that is pretty much everything, isn't it? We did promise.
You want to get that tip in, don't you?
I do. We did promise a tip at the end, and
we got time.
You're going to be rewarded if you're still watching, because it is a good one. Yeah. Have to admit, I think we have used this tip on another video.
And we will. But let's be honest,
and
we will use it again.
Most of you aren't still watching by now, are you? So actually, if you are, you know, hopefully you've enjoyed
committed,
it. Yeah. So this is a really important tip. When you apply for the mortgage, your interest rate will be locked in at point of application. Obviously, bear in mind, interest rates change all the time. Fixed rates go up, go down, depending on the market. When you apply for the mortgage, you lock in the rate. When you pass the credit check and we submit the application, the rate's locked in. So even if they go up after that, it doesn't matter. You've locked in the rate. That's a worst case. What a lot of people don't know is that between applying for the mortgage when you lock in the rate and exchanging contracts right at the end of the process before you get the keys.
Which could be around 4 months, as we said earlier.
Yeah, could be longer, could be less, but on average 4 months. It's quite a long time. The market can change in that time.
It does change all, yeah.
If interest rates improve, if you've applied for a 2-year fix at 5%, and in that next 3 months fixed rates drop, and in a few months time the equivalent rate is 4.6%, normally you can switch over to that lower rate. Often with the same lender that you've applied with, if their rates have improved, we can switch over to a lower rate. They don't normally need to do a new assessment, but sometimes they do. So you have to bear in mind they can ask for up-to-date documents. So try and give us a little bit of notice, but make sure whoever you've applied for your mortgage through, if it's a broker, tell them, look, I'm approaching exchange, can you do a rate check? And we can look at the market, and if rates have dropped, we can normally switch over to a lower rate. You're not stuck on the one that you've applied with if the market's improved. That genuinely could save you thousands of pounds. It depends on the market. Obviously, if rates are going up and up and up, you're not going to get a better rate. You've just locked in the worst case scenario.
But at least you got the best one you could have got.
Exactly. But if they come down, you can normally benefit from the lower rate, which again, if you're on a £250,000 mortgage, if you save 0.4, 0.5%, that is a lot of money across a couple of years. So make sure you ask your broker or your bank to do a rate check before exchange. That's a really important tip, so we're going to just keep using it. Guys, that's everything. As we mentioned, if you need any help, just get in touch, give us a call, head over to the website, leave something in the comments, and we will see you next time. Thanks a lot.